is up, YouTube? What is going on? Good morning. Welcome into another pre-market live stream here with the Everyday Growth Advisors. Hope you're having a good morning so far. PCE numbers just came out as expected. Not really much of a movement so far here. It's been a pretty whipsaw market this week. Volatility is definitely set like higher this week, and that's typically a good thing for us day traders, because volatility means you can catch moves in many different directions. If you've been following the newsletter, if you've been following everything that we've been talking about in this pre-market live streams, you should have made a nice decent amount of money this week. It's been a really good week for us, and I've tracked everything like accurately this week for me to do that recap video on Sunday for you guys. So it's definitely going to be a great week recap this week, and I'm looking forward to making that video for you guys because I've been keeping track of everything really succinctly. Really nice move down in the market, followed by a huge bounce yesterday at close to the market close. That was a massive short squeeze right here when everybody was getting to bearish. We saw put to call ratio spike to about 2.0, which is the highest it has ever been historically. That means that there were almost 2 times more puts than calls in the market, and that's pretty insane. This morning we had PCE come out, and then the market kind of whipsawed here a little bit, and now we have about 30 minutes to the open to see where we're about to head from here. Expectations for inflation and the macro standpoint, or rates pricing in, are going to be very erratic in the next couple of weeks. Not to mention, as I had said on Wednesday's live stream, there was a very important number that market makers were looking to defend, which was the, I believe, 38.35 level. 38.35 is the level that they're likely to chop around and be either above or near, because that's where the gamma expiry is going to roll off for those huge contracts that we saw them defend against. So market makers are actively defending, and specifically, it's not just any market maker, it is JP Morgan trying to defend against their position. So I'm pretty sure that there's incentive for other market makers to also get involved in making the market for this volatility, which now is seeing a little bit of a comeback. The VIX spiked all the way up to 23.89 yesterday, and then tumbled halfway back down, and we managed to catch quite a few interesting positions yesterday at the tail end. So first things first, I opened a equity position on Tesla. I've never actually been an investor, but I do like the price of it at this level. I took a very small nibble so far, very small position. I just picked up about 500 shares, and I'll be holding those for longer term. Even though I know this is not the environment where I want to be buying risk assets. Yesterday it had a 10% drop, and I know that it was a pretty parabolic drop, which means that it's likely to also bounce back at some point of time. And this is just represents a very small nibble of me actually taking a bigger position on this equity, because I think the forward multiples of this business are actually possible to be pretty decent. I know that they have high cash burn and the interest rate environment is pretty bad right now, but I also like the fact that the risk multiple for a stock like this and the risk premium is still there. So I'll take my chances at taking a small nibble position at $120 some, and then hope to add more around 93, or even if we come down to $60, I'll be happy to take more to average down my position for the long run on Tesla. So this is a stock that I'm just going to take a small nibble on, and obviously after having a 10% down day, it would be obviously it would make sense to take some exposure to the upside. So I also took a little bit of a derivative position, but not a very crazy risk position. I just took some 130 calls for next week expiry, and that was something that I was watching. Apart from that, I also took Netflix. Netflix traded with a decent relative strength yesterday against the market. Everything was busy selling off, and Netflix barely budged even like I want to say not really that much throughout the whole day. Entry was somewhere around here. We closed somewhere around here at the end of the day. And I'm looking for continued strength into today for Netflix to kind of retest 301 or also 304, 305 roughly before heading back down again. So relative strength on Netflix has been pretty good. That's the reason why I opened that trade. Then I'm not sure how many of you took semis bearish, but this was a great opportunity when I called out the 212 rejection. Unfortunately, it gapped down and I didn't chase this to the downside because that was a huge sell-off on NASDAQ. But that entire position played beautifully. If you even took NVIDIA, that was a beautiful one. NVIDIA rejection was a really great trade all the way down into the 149 on the same day. This would have paid like hundreds of percent on the derivative side. So this was a really interesting trade that we kind of projected, but I failed to play because of the gap down and then a very, very abrupt sell-off, which I was not able to catch a pullback on. Good morning, guys. Pretty ambiguous pre-market so far. Yep, that's right. What's up, Brenda and Millie Block? What up? Go ahead, put your tickers down if you want me to go through them, and I'll get to them in a second here. Okay, so once again, SPX. Obviously, we're kind of in a chop territory here. We're hitting this demand zone. We hit it twice now. And it's been really interesting because we haven't really quite been able to break below this. On the daily, we're kind of forming a range here. So let me show you real quick. We are forming a range on the daily here. So you'll see that mainly right now there's a little bit of a range here. So this bottom range and then this top range. And we could really chop between these two ranges for a little bit. Maybe, you know, a couple more candlesticks, but once we start breaking that range, that will be telltale sign. So remember how we had a box up here? We can now go ahead and draw that box down here actually. And so I'm going to actually use this real quick as the box. And this becomes our new range. So you could draw a box around this area and trade the breakout around it. But remember that if you play the breakout, then you have to be managing your risk on either side. I know this looks a little confusing, so that's the reason why I was trying to grab the, yeah, there we go. Try and grab the markings away. You don't really need markings and stuff like that sometimes. Okay, so, yeah, we've had an impulsive wave breakdown, and then a strong pullback, and looks like we tried to go for another crashing wave, but we bounced on it. So the market's kind of signaling a little bit of indecision here. And likely to also be undecided today. PCE didn't really change anything. It didn't really come out in a positive light or negative light. So today's not really going to change anything. And then we have Monday, which is Christmas, which is not. It's going to be a short week next week. So you're only going to have Tuesday to Friday. Monday markets close. Just so you guys know as a reminder. So make sure that you don't turn up on Monday and expect market to be open. But as of right now, in terms of where the expectation should be, I think that there is incentive for market makers to hold the prices above 38.35 until those expiries roll off. And there's a good amount of exposure on those contracts at 38.35, which is close to about 4 billion. So there's that definite amount of interest to hold that, hold the line on that strike. So 38.35 has been very fiercely, so far fiercely defended, and we've really pushed above any of these extreme oversold levels fiercely. NASDAQ has been the problem child. If you look at anything more than anything in the market right now, it's NASDAQ that is really the main issue. SPX has been kind of doing its own thing in range, but NASDAQ is the one that has been selling off and causing all of this pain. And if you look at the NASDAQ, we're not really far off from retesting these bottoms, which I think that we will in just maybe the next couple of sessions next week. Retesting this 10,624 is going to solidify either we break through and get into this huge demand zone below us, or we bounce here again and then start to crumble or start to go up to retest this 11,218 before rejecting the 23.6 retracement level and then coming back down. So this could be also a scenario, something like that, where we bounce here come back up here and then, have a rejection to come back straight down. That will also set us up to pop out of this trend line once again. We've been popping out of this trend line quite a bit, so I wouldn't be surprised if that happens. But as of right now, looks like the risk to reward ratio is in no man's land. We're in between. There is not a decent risk to reward ratio to the downside, and then there's not really a confirmation for us to take the risk to reward ratio to the upside. So I would say today, personally for me, is a risk off after I close off my trades. Yesterday I took these three. I'll probably close these off in the profit today, and then I'm gonna call it a week. It's been a $19,000 week for me. Probably will end the week somewhere around 30 something maybe. I'm not sure. It depends on how much I close out these SPX contracts, and if SPX can hold these pre-market levels. So yeah. Apart from that, let me see. I have some opportunities in energy yesterday. Energy came down, XOP came down to touch the long-term trend line here, which has been a very key trend line for energy. I'm looking to enter a long position on energy here in the coming sessions. Perhaps today I'll take a nibble, and I think I'm expecting it to kind of move sideways here a little bit more. So I might take a nibble today and then add more as we get sideways into this little time frame here. Maybe into January pretty much. So we're looking at least a couple more days here until we get that entry on XOP to really take off. But I'll take a nibble position today for the upside. Apart from that, hey, if you liked GameStop at $120, you'll love it now at $20. So for all of you people who had traded the GameStop fiasco and oh man, we're gonna hold until the stock price goes to 500 and all the dreams that got shattered along with it, this is a very interesting and telling moment that sometimes in the stock market fundamentals do matter. No matter what you like, just like in the bull market where everybody starts to go crazy and they start to fantasize about all the possible gains you can have, like, oh, this is gonna go to the moon, right? Remember Ape City? We had all of those apes that came in from Wall Street Bets at some point of time, and they were like, oh yeah, we're going up, it's never going down, we're gonna hold the line, right? And now it's all gone, so just casual reminder that the stock market will humble you in the long run. And Benjamin Graham's quote will always hold through the test of time. And I'm pretty sure you guys know which quote I'm referring to, which is, in the short term, the market is a voting machine, and in the long term, the market is a weighing machine. And this is your voting machine period, and this is your weighing machine period. Stocks that don't have gravity and are not strong or don't have strong balance sheets are never going to survive in tough environments, and that's really the real test, right? Apple might sell off aggressively, but look at its performance with relative to other stocks like Tesla, and other high beta stocks, right? So this is an example of a company that has a pretty decent balance sheet or pretty good financials. Even Microsoft as a business, right? If you think about it, if you look at the weekly chart, it has come down, yes, but it's nowhere as near as this chart, for example, right? Look at Tesla, right? Or, for example, GameStop, right? Or, for example, I can give you many examples, obviously, like Roku. Look at that one, right? This was another one, right? The apes were talking about this one, too, back then. The apes were like, oh, Roku's going to go to 700, right? Where are we? $42 right now, right? So, things like that always bring you back to earth and give you perspective, and I like to remind people every once in a while that, hey, this is where we are, and remember that things can get much worse before they get better, and things can get much better before they get worse. So, take it one day as it comes, and try to control your emotions, because it's never going to get you into a good place. Once again, I want to express my deep gratitude for everybody attending these pre-market live streams. I truly appreciate the attendance. And the fact that you guys helped me with smashing the like button, and just taking your time out to be here. I truly do appreciate it. I have some big announcements that I wanted to make, and so I'm going to go ahead and make those announcements right now, since there's enough of you here. And then right after that, I'll answer any questions and then end the stream right there. So I was just announcing this on our Discord yesterday too, so let me just tell you guys while you're all here. So on the 31st of January, we're going to be releasing and launching EGA version 3.0. Now, it's taken me many months of work to put together perhaps the most comprehensive trading course that you're ever going to lay your eyes on. After having been through my bachelor's in finance and my master's in finance, having some experience working as a financial analyst for a while, and then day trading for a good portion of the past 7 years, I've finally come to the point in my life where I want to put together a piece of my own legacy and hand it forward to the next generation of people who are willing to learn. EGA 3.0 is a accumulation of all of the things that I know put together in the most digestible manner for anybody who is just interested in learning about investing, trading, and also valuations. I've also put bits in there about options trading and market psychology. I've literally went back to my textbooks in finance and drawn upon all of the lessons that I have taken in school, put together everything that I have gone through personally in terms of my experience in the market, and gelled both of those two things together to come out with the most comprehensive course that one can take in order to align themselves with financial markets. Okay. Now, the course is going to be released on the 31st of January, and it's going to be coming with the option to have Discord access with it or without it. So you'll have access to our Discord community at a small additional fee for like a whole year. And we're not giving access for less than a year because it has come to my attention, and after a lot of deliberation based on the data that we've been looking at, students tend to perform the best only after going through 1 year of learning with us. And if you guys know about the mission of why I started EGA, was because of traders not really knowing what they were doing and jumping into the market and then stumbling and falling and going through a lot of hardship without really finding the right path. What we aim to do is to shorten that journey where you're stumbling and falling and give you that shortcut faster in order to get you to you being a proficient trader and finding your own style faster. That's what we're here to help you to do. And we're doing that through that practical learning approach, which is, you take almost like an internship with us and you learn alongside people who are really good at what they do. And that's really the only way you're going to step ahead of everybody else and get to where your goals are, right? So I'm really excited about that in January, and obviously we're going to release more details as the time goes forward, sometime in the first few weeks of January. And on top of that, we're making some upgrades to the Discord server. So yeah, I can't wait for 2023. We're just 1 week away now, and it's going to be the most amazing year for us. Personally for me, it's going to be the most amazing year. Now, I know some of you must be also wondering if EGA is going to be holding any live courses in the future. The answer is yes, but because EGA version 3.0 is mostly, it's going to be mostly self-paced, which means you're going to be learning on your own time, and there'll be modules that you'll be taking, and quizzes especially. The most important thing about that is that we will also be running a couple of live courses throughout the year, but it's not going to be nearly as many as last year. So we're going to be scaling down on the in-person courses, and when somebody does want to take the course now, they will go through the self-paced course, and it has a really nice flow through it. You're going to learn about valuations. You're no longer going to need any kind of outside help. Everything's going to be inbuilt in the school. You'll also be given a DCA calculator. Like I've literally designed this one from the ground up for you guys. I'm giving you guys a sneak peek right now. So, there I built my own discounted cash flow calculator, for example, like this one, where you can just input everything, and you get the intrinsic value of the stock pushed out for you just like that. Everything's done for you. You just need to access pretty much the data from Morningstar or from Yahoo Finance or anywhere, any other repository of financial information, macro trends or whatever you want to use. And there's all step-by-step information all provided for you on how to do it. Oh yes, and another thing is through this course, we're also going to be doing once a month market update videos that will be pushed every single month out, which will be a part of the course. So it'll be like a monthly webinar that we'll be holding for all members of that course, of this specific EGA version 3.0 course. So that it's just going to help your learning process and everything that you're going to be going about with. And yeah, I'm really looking forward to it. It's been a lot of work, guys. Like I've been working almost 8 months doing this. So I'm really, really looking forward to the launch. And I can't wait for you guys to see it. Obviously, there's going to be some overlapping content from previous courses as well. I've put all of that in there as well. But I've redesigned a lot of this stuff from the ground up to reflect better. And the flow of it is just amazing right now. So I really can't wait. And, once again, thank you guys for, supporting this channel, for being here. Yeah. Okay, does anybody have any questions regarding market conditions? Maybe you want to ask me to chart something specific. Go ahead, ask me right now, and then right after that, I'm going to end the live stream. Remember, next Monday, we won't be having a live trading session. A live stream. So this coming Monday, we won't be having a pre-market live stream because it's market's closed on Monday. So we'll revert back on Wednesday. All right. Square. Okay. So I'm not sure if you guys are aware of the Wyckoff cycle or also the market psychology cycle. If you're not aware of it, let me try to show you. Let's see here. Sign-ups for the course will be available from the 31st of January onwards, so we still have a little bit of time to go. I'll keep you guys posted. Trust me. Like when it's kind of getting close, I'll tell you guys. I'll let you guys know. Okay, give me a second here. I want to show you guys something. This is directly from the technical analysis course, and this will be part of the course as well. So I'll just give you guys a little bit of a sneak peek. Where is it? Okay, found it. So this is usually part of the technical analysis course, but anyway, I want to show you guys. So this chart and Square's chart has a very, very, very uncanny similarity if you look at it, right? And also Roku's chart looks like this, right? This is typically that rush that you had in 2021, and now you're looking at this depression level. Everybody's in a depressed state right now. Typically, this is where your institutions enter, right? And then you have a wave of optimism where a lot of people will enter. This is where smart money also, enters. Then you have your profit taking, where majority of institutions will be taking profits off. And this is usually where retail picks the best moment to FOMO into it. The highest risk for losing is typically up here. And this is where euphoria usually takes over. It's when everything is exuberant, right? And then comes anxiety after the first wave down, then denial and panic, this about here is where everybody's caught holding the bag, right? And this is, you know, I have a saying in EGA classrooms. If you've ever been a student of EGA courses before, what do they say here? This over here, they say one thing very specific, and use a hashtag for it. Why does God hate me? This is what they ask themselves right down here. They ask themselves, why did I get caught lacking, and why does God hate me that the asset prices to come so far down? Because they don't understand what is going on. They don't understand. Right at that moment, they will sell out of anger or depression or whatever other emotion they're facing. And that's exactly where institutions buy the dip for the next wave setup. So now compare this exactly to Square. Do you see the uncanny similarity? Very similar, huh? Exactly the same, right? This is where your institution started getting in. Huge wave up, right? First denial, then anxiety, then depression, anger, right? This is where we are now. So, so you asked me about Square, and my answer to this is, if you have shares and you're selling cover calls against it, beautiful. I think that's the right strategy to go with this right now. But I think as long as we hold above this low over here at $32 or even at $49, you could continue to accumulate shares of this for longer term, as long as you have done your due diligence in making sure that the stock has a decent financial stature. And that's just my 2 cents on this one. Personally, if you guys realize, I don't touch stocks like this. Look at my entire trading journal, right? I don't ever touch stocks like this until and unless I see a momentum opportunity. You will realize that I trade the same stocks day in, day out. I'm a very boring trader. My stocks that I trade are so boring. I stick to a very few sectors that I like, and those are the only stocks that I will trade. You can see it's mostly SPX and this, and I'm a very sector-based trader. So you can see, like, this is my entire log from the entire year, right? Once I close out this week, I'll probably hit about, let's see, I'll probably be around $850,000 or $870,000 for the year. But I keep a very detailed log of all of the trades that I take per year. And so try to stick with the things that you really are good at. That's one of my biggest pieces of advice. No problem. Appreciate the live. Thank you, man. And did you mention? Okay, so I already mentioned about the course. Her shares. Okay, cool. Okay, well, I don't have much else to say today. I'll obviously be back on Wednesday with another pre-market live stream for you guys, and hopefully things haven't moved so much from this time. I'm of the view that we'll probably end up chopping somewhere in this of this region. So I don't think it's worthy, or I don't think it's the right thing to over-assign risk in this space. I think if you want to take a short position, at least wait for the backtest of 3861 or the backtest of 3900, like that sub 3900 level, to confirm that, you know, there's indeed that pressure of sellers. Because bulls, or rather market makers, are going to try to squeeze this at least a few more times. All right. Well, I hope that you guys have a great trading session, guys. And I'm going to jump on the Discord right now. Keep doing a good thing. Help others. Spread as much knowledge as you can to other people. Help them out. Traders who are struggling. That's the name of the game. Help others, and then, you know, you'll get helped. So I'll see you guys soon. Next Wednesday. And peace out, guys. Love you all. Oh, and Merry Christmas to all of you and your family. Take care.